Hey guys, it's Bas again. Today I want to talk about a certain topic called leverage. And leverage is a term that's used in business a lot. And one of the things that it's used a lot for is in trading. And as some of you know, I am a full-time coach and trader. I'm working with the Global Traders team. We are working together with iMarkets Live as the biggest education university worldwide. And as many of the people that are watching my videos are traders, I want to talk a little about leverage in trading. Now, what leverage means also as a business, it's basically that you are borrowing money to do something more that you normally cannot do. And as a business example, a very simple version is that a car factory, like a car company that manufactures cars, let's say, is loaning a certain amount of money from the bank to make a factory that's bigger than they have at this moment, and therefore they can increase their sales on the amount of cars that they can manufacture. So they make more cars, they can sell more cars, and their profit will go up. Of course, they need to invest this amount of money, and you can borrow money to get this leverage of making more cars. So another option in leverage is something that a lot of people know. It's used in the housing market or in the real estate market, where you are buying a house for a certain small percentage of your own money, and you use money from the bank. So let's say you are doing real estate. Mostly in most countries you can loan around 50-60% of the house. You can loan this amount of money. So let's say €100,000 or $100,000 house, you need around €40,000 yourself, and you get around 60,000 from the bank. Then together, like, you buy the house. Of course you need to pay interest, and you need to pay for you need to pay interest, and you need to pay the bank back. But on the other side, your house is already going to give you revenue by renting it to somebody else. If you use it for real estate, then it's a real asset. So if you do that, then you already, let's say, make 700-800 euro a month. And on the other side, you need to give the bank back, let's say, 250 euro interest and 200 euro payback every month to make your loan lower. So this is another form of leverage where you actually get a lot more money that you can use from the bank, and it's easily to be paid back by your renters. So actually, when the money from your renter moves to your pocket from that amount of money you pay the bank, and your assets are growing because the house becomes more yours. So maybe more about real estate another time, but this is another form of leverage where you get more money than you have. They also call it using other people's money, or in this case the bank's money, to get more done. And the cool thing that in trading, and especially in forex trading, this leverage is not like 40% your own money and 60 from a bank. But in forex it's crazy. You can go up to 1 to 1,000. That means for every euro you invest, the broker is adding 999 euro more for every trade. So basically what this means, trading with leverage is something that becomes risky if you really go to the higher amounts. Because let's say, take the example of a 1 on 500 euro, 1 on 500 leverage. So for every euro you invest, the broker does actually 500 times more, so 500 euro extra. So what happens when you are trading is that basically you are trading much more than you're normally doing, or actually, like, you need less of your own money to do that certain trade. But when it goes good, you have more profit. But when it goes bad, you also have more losses. So the lower balances, like the lower accounts, they are mostly going up to 1 to 500, or some brokers even give 1 to 1,000 leverage. You will see that when your balance goes up to certain amounts, let's say 1,000 euros, 5,000 euros, 10,000 euro, that the broker is going to lower your leverage, because they need to actually add that amount of money to your trade to actually have this trade. Now, as an example, every trade you take, let's say in a currency world, let's say a euro dollar trade, you take, if you take one full lot, one standard lot, you take 100,000 shares. So 100,000 times 1 euro against the dollar. So this amount of money, if you have no leverage, that's what it was before the age that we had mobile phones and apps and everything that basically everybody can trade from their phone or laptop, and you had no leverage, you needed to actually come up with 100,000 or more to do just one trade. So now we have people that are starting for $10 or $100 just because it's possible to trade with leverage. So what happens is that if you would trade one full lot, normally you need 100,000 euros. But with the leverage of 1 on 100, you actually just need 1,000 euro to take this one full lot trade, which becomes 100 times more. So the cool thing with this is that with lower amounts of money, you are able to take bigger trades. The result of the trade is of course the same. It's the certain, like a one lot is 10 euro per pip. So it's like a fixed lot size gives you a fixed result. But you will see that you can take much more trades when you have a higher leverage. So most people are trading and they are looking to their margin. And the margin is basically what you have left, what you didn't spend yourself. So let's say I'm taking a small trade and I'm using like 3 euro of my own money for that trade. So I had, let's say, a 100 euro account. I'm using 3 money for that trade. So my free margin at that moment is 97 euros. So you just have 97 euro to keep doing other trades. So they will also give you a percentage of your margin level, and everybody wants to keep that percentage above 200-300%, meaning that you can have a little bit of drawback. Your trades can go a little bit in minus, because under 100% means that you are not good for your money anymore. So most traders accept that you maybe drop a little bit below that 100. They will start sending your emails. They call it margin calls, like, oh, you are under you're using more actually than you deposited at your broker. When it becomes under 70, they definitely are going to message you, call you, or maybe even close some of your like the worst trades. They always close the trades that are the biggest in minus to give the rest some space. And at 50%, mostly, like all the brokers are different, but at 50%, they mostly just close out everything and you end up with zero. And actually the broker lost as well at that moment. So this is what we call margin calls, is that you loan so much money and you traded more than you actually put in, and the broker and you both lose it. So this is something that you made it too far. So the most important thing with leverage, what you need to know, is that you decide the lot size and you look at your margin and you see, okay, I want to keep it above 200%. So the higher your leverage, the more trades you can take. So a high leverage or a low leverage doesn't directly mean that the euro per lot or something like that changes. No, it's all the same. If you trade 0.1 lot, you take 10 pips, you will make 10 euro or $10, depends on what's the base currency of your account. So this stays the same. The question is just, with, let's say, 500 euro, you're able to take maximum 5 times 0.1 lot. And then if you try to open another one, your broker will tell you not enough money as the error, meaning that you don't have enough free margin to open another trade. Let's say you have 1 to 500, that means that you can maybe go to 2.5 lots, so 5 times more, and you can trade much more. But trading so much more and trading so much higher lots also gives you much more exposure, and the trades go faster up and down in the total of 2.5 lots or the total of 0.5 lots. So this is what I try to explain, that people understand that margin doesn't change the results of your trades or the results of what you get from your lot size. It's just how much you can trade and how much you can push your account and how much of your own money you use and how much of the broker amount you use. And This is something that's very misunderstood. A lot of people think if I lower my leverage, I have less risk. If you take the same amount of trades, you are actually risking the same or even more, because you use more of your own money and less of that of the brokers. But that's just percentage wise, you don't even see that. But you take a little bit less risk because you are probably getting this error message earlier saying you have no more money to take trade number 4, 5, 6. After 2 or 3 trades, it's just saying like, okay, this is all you can do. You cannot trade more. And after you close some trades, you free up some margin, you can trade again, or you are pushed to trade smaller. So what I can really advise to beginners, of course, if you have a €100 lot size, you kind of need to go on 1 on 500. When your lot size goes higher, it's really recommended to, if your broker doesn't do it automatically, to put your leverage a little bit lower. Of course, when everything goes right, everybody's happy, everybody stays as long as possible on this high lot size, but we also teach everybody not to be greedy. And if you have a high leverage and your balance is growing, it's basically growing 500 times faster than you see. So you make €1, you actually get €500 more buying power. You make €2, you get €1,000 more buying power. So you can trade 0.02 lots more and more and more. And people go in higher lot sizes and they make more money, but they get much more buying power. So buying power is great if it goes well. But you go further and further and further, and at a certain moment you open a 2-lot trade, 2 full lots, that's €20 per pip. You lose 50 pips and €1,000 is gone. And you could only take that big trade because of leverage. So again, leverage doesn't change what's the result of your trading. Leverage just maybe blocks you out further in pushing you to make smaller trades, or pushing you and simply make less trades, because the total amount of lot size that you can take will be much more limited. So that's definitely something I really want to point out today. I know it's really based on trading, it's really based on forex trading. If you trade cryptocurrency, you also have leverage at most brokers. Sometimes it's 1 on 5, sometimes it's 1 on 15. The reason that it's lower is because it's much more volatile and much more risky for the brokers. Maybe some brokers give 1 on 50. If it's much more than that, watch out, because that means that the brokers offer a lot of their own money in your trading, and cryptocurrency is a lot of pips per trade. So watch out, choose a great broker, contact your coach for that part. And if you're trading stocks, just think about the 1 on 5, 1 on 7, like this kind are the amounts that you get. And with stocks, of course, you want more buying power. You want to be able to buy more shares to get more of your results. But there it's very clear, if you buy more, you will also go faster up, go faster down. So in stocks you can definitely see leverage working, because every time you win, you will get so much more buying power. And on cryptocurrency and forex, it's working the same, but people just see it when they are starting to put bigger lot sizes. They put the bigger buy power in, and they will get the moment of like a margin level call, like you are using everything, or a no money call that you cannot even open a new trade because you are using everything. And mostly that's under 200 or 100%. So you can keep buying till you get this error, and then basically you maxed out your account and you are on a very, very risky level. So this is how leverage works in the business world very shortly, and in trading world a little bit more advanced. If there are any questions, or if you want any more explanation, maybe on a more basic level or on a more advanced level, I try to keep this call, like this video, in a moderate level, that everybody has some information out of it. If you need more information, or if you need a more basic explanation on how leverage works, let me know. I'm more than happy to share this with you. I'm more than happy to have a call to talk together about what are the great options. My contact details are below every video I make. You can always send me a message on Facebook Messenger. That's the easiest way. And let's just stay in touch and see what we can do for each other. And I hope this video helps in understanding leverage better. Thank you very much for watching, and see you on the next video.